investors. We're talking about currency trading, but that has changed. Retail investors now represent nearly 10% of the average daily volume in the $4 trillion Forex market. So how much bigger can it get? Glenn Stevens is the CEO of Gain Capital, which owns Forex.com, saw a whopping 99% rise in international retail Forex volume toward the end of last year. Glenn joins us from the Trader Expo in New York's Times Square, across the street pretty much, in this exclusive interview. Glenn, it's always good to see you.
Same here, Melissa. Thank you.
What can you track this big rise back to? I mean, was it the European financial crisis?
Well, that's one of the catalysts recently to put this on the top of the headlines. I mean, it's a huge market, as you said, $4 trillion per day. It's actually one of the few financial markets that the U.S. doesn't dominate. It's a market that retail traders and institutional traders have been following very closely globally, and only more recently are the U.S. traders starting to get comfortable with it. And there's lots of content, lots of information, lots of providers, and so, you know, this shows an example of a lot of people flocking to this market because it's got a lot of low barriers to trade, low execution costs, and frankly a lot of excitement around it. That's what makes it really interesting for the retail user as well.
It's certainly been a very volatile year in terms of events that drive the currency markets. We had the Japan earthquake, the European debt crisis, a debt crisis here in the United States, and at the same time we had a stock market that didn't do so well. Does that actually drive people into other asset classes like currencies?
I think it definitely does. You know, one thing that currency markets don't have is necessarily a bull or a bear market, because the reality is if the yen is appreciating or depreciating, or the euro is on the perceived precipice of a collapse, then that's not a bear market for the euro. That could be perceived as a bull market for the dollar. So it really gives a great kind of two-way flow to this market, and you can have traders and customers line up on either side of the philosophy. And what's excellent is that it's a very transparent market when it comes to information. So for example, we can all watch the headlines, we can all, you know, keep track of our Twitter feeds and then react to it. And it's true 24-hour market. I mean, a Forex trading day starts Sunday afternoon, kind of New York time, and finishes Friday at the close, straight through 24 hours. So for those people who want to trade after hours or over in the overnight session, every day has kind of three markets: a European session, an Asian session, and a U.S. session. So all of those things are factors that puts the retail trader on very much a level playing field for access to this market.
Hey, Glenn, other than the obvious, the euro, the yen, the U.S. dollar, what are the currencies that people are focused on? Where do you see growth in your business going forward?
So a couple of things there. I mean, absolutely dominant is the euro currency, followed by the yen currency, just because movement of capital between those countries and continents. But there's always going to be these spikes in interest, like in the British pound or the Canadian dollar. So you might see a commodity move, so a commodity-based currency like the Australian dollar or the British pound, thanks to oil moving. So you'll see these spikes of interest and spikes of volume in currencies that are tied to other products. Now, the ones that hang in there are euro and yen, but let's say the Swiss franc, when you have some international instability, or like the Arab Spring, people will flock to the Swiss franc. So there is these trends and there are these linkages to geopolitical events that will drive interest in certain currency pairs. And these days, obviously, it's all about Europe, and, you know, Greece got a bit of a reprise, obviously. But what does that mean? Does that mean the euro changes its complexion? Is there a rebalancing there? Is it a medium-term weakness? So there's lots of drivers even kind of underneath the whole macro picture for these currencies.
You know, in terms of the retail investor, they're not accustomed to using as much leverage as I would say that the professional investor in currency uses. So what are the margin requirements going to be for somebody who wants to get into the market? Similar to stocks,
Well, here's the answer. The headline number is that the leverage seems much harder. So, for example, the local regulator in the U.S., it would be the CFTC, so Chairman Gensler's domain that would determine the leverage here in the U.S. Overseas, in the U.K., they have their own set of rules. In Japan, they have their own set of rules. But generally speaking, it's going to be a 2% margin requirement. So what that means is, if you have a customer trading equities who normally can go 2 to 1 on his money, in currencies, you can go 50 to 1. Now, before you get oohs and ahs at 50 to 1, you have to consider that a movement in a currency pair of 2% is a tremendously large move intraday. In a $4 trillion per day market that dwarfs any other financial market, a 1-2% move is large. So if you compare that to a 10% move in a stock, which you guys see all the time, then all of a sudden the difference between 50 to 1 and 2 to 1 doesn't seem such a large chasm. So to answer your question, the retail user has access, although not recommended, but access to go 50 50 to 1, but it is a different set of volatility and a different set of intraday movements that's going to affect that leverage, which means it's much more muted than what it appears to be on paper.
All right, Glenn, we've got to leave it there. Thanks for your time. Enjoy the Traders Expo. Glenn Stevens, the CEO of Gain Capital, owner of Forex.com. Coming up next, a big day for